Hi, I'm John Persinos, Editorial Director of Investing Daily, with a video update for Monday, January 4. Welcome to my first video presentation of 2021. Well, as my favorite crooner might sing, it was a very good year. For investors, anyway. The stock market swooned in February through March when the coronavirus pandemic first became apparent. Stocks posted the fastest bear market in history. But when monetary and fiscal stimulus was implemented by the Federal Reserve and Congress, respectively, investors took heart and we experienced the fastest bear market recovery on record. It was an astonishing recovery, and despite volatility and dips along the way, stocks continued to rally until the end of the year. See the first graphic. Yes, unemployment remains high, a slew of businesses are either shuttered or deeply in debt, and the deadly coronavirus still bedevils the world. But as I've explained in previous videos, the stock market is not the economy. Markets are forward-looking, and Wall Street expects a bountiful 2021. As 2021 gets underway, I expect stronger economic growth, a more confident consumer, a continuing housing market recovery, continuing support from the Federal Reserve, faster corporate earnings and revenue growth, a waning of political instability, more or less, and more stimulus spending. In other words, conditions are ripe for a secular bull market in 2021. Not just the U.S., but the rest of the world should see a significant jump in economic growth this year as vaccines kick in and national economies reopen. Take a look at my second graphic. I also expect the stock market rally this year to have broader shoulders. In 2020, a handful of U.S. mega-cap technology brand names accounted for a disproportionate share of market appreciation in 2020. As the economic recovery accelerates this year, I expect sectors and asset classes that have lagged to pick up the pace. Specifically, the rally should broaden to include small-cap and international stocks, as well as economically sensitive cyclical sectors. As the following chart shows, the small-cap focused Russell 2000 index beat the S&P 500. Make sure your portfolio has exposure to small-cap stocks, which are poised to continue their outperformance in 2021. The small fry, on average, have dramatically outperformed all other types of stocks over the long term. Make sure your portfolio is diversified to a rotation of leadership across sectors and asset classes. A major tailwind for equities of all sizes this year will be the continuation of low interest rates. The Federal Reserve has indicated that it will keep rates low into the foreseeable future. This policy is unlikely to change, even as growth recovers, because there's still bound to be sufficient slack in the economy and jobs market to warrant central bank support. Well, that does it for now. Let's hope the new year brings not only prosperity, but greater happiness and health to humankind. If you have any questions, you can reach me at mailbag@investingdaily.com. Thanks for watching, and see you next time.